Welcome back to a brand new No BS crypto news video where I bring you the news in the most no BS kind of way every single day. Now today we have some pretty interesting predictions coming out just in time for the real true commencement of the bull run. AI narrative is going to be hot. We've got proof for you today, and we also do touch on some pretty important regulations that are coming into fruition here very soon. Now we also have some pretty interesting market updates you are going to want to listen to as well. So with that all being said, again, what do I always say in crypto? Do not be a day behind, because that could be the difference between making and losing money. So make sure you are subscribed for daily crypto news and turn the damn bell notification on so you don't miss a video. Now, with that being said, let's begin. So the general market outlook today, I don't really want to spend too much time on this. Again, Bitcoin sitting at $42,500. I'm not so concerned about Bitcoin or Ethereum in this case, but what I want to take your attention to is the top crypto gainers and losers. Now, we have Sai in number one spot. That's great, up 25%, but Mina, $1.44. Now, I don't want to toot my own horn, but I think a lot of you guys know what I'm about to say here. I was pushing Mina for a long time, and yes, I get it. We're in a bull run. Everyone's making money. Most predictions are going to at least come true in the short term. But what I want to say here is the reason why. So a lot of you might not have caught the reasons why I've been a big proponent of Mina Protocol over the course of time. But if you don't know, Mina Protocol fits into a lot of really promising narratives. And a very specific term I talk about, especially if you are new to the channel, is memetics. This is what underpins the success of a cryptocurrency, particularly in this next bull run. Memetics is effectively what the project is known for, how unique it is, and is it understandable for the degen? Again, we're not trying to find what might have adoption in the next 20 years. We're only concerned with 2 years, and in the case of Mina, it is an extremely interesting project, especially in the eyes of the degen, right? I could go over all the reasons why, but suffice to say, it definitely ticks those boxes. Now, we've also seen the likes of Polygon over here up 13% in the last 24 hours. Now, over these last few days, over the last week, basically, I've been pretty much dropping in Polygon news here and there to tell you all Polygon is grossly undervalued, and today it's broken out, right? Today, we are at $1.05. We were down about here a few days ago, so for those of you who caught Polygon back then, and for all of you who have been holding Matic, it may be the start of something really big here. Either way, even if it comes back down again, I think, needless to say, Polygon is still undervalued and has been, okay? So lots to still come for this project. Very much so will be one of those situations like Chainlink. These massive upgrades have been out. Price didn't appreciate, but when price does appreciate, everyone goes, oh my God, I should have bought when those big updates came out. Typical crypto story. In this case, as well, we have Render pushing up. We have some news relating to Render and AI, as I said, also today. Quant as well, $144. It's so good to see Quant finally moving up in this case. Now, Bonk takes the number one spot again, actually. I think it's like maybe the second or third consecutive day here at number one top losers, but that's okay. Again, for meme coins, it might go down 20, 30%. It goes up 600% the next day. These things are crazy. Injective has finally taken a somewhat decent breather here, down underneath $40, and so is Celestia. So if you are someone dollar cost averaging into those two projects, this is now your time. It's a little bit unfortunate. Injective is like 30 to 40x up in the last few months. Kind of insane. So let's get into our first news story today, and that's the spot Bitcoin ETF news over here. So we had this really interesting take on these ETFs that I disregarded a few days ago. I came back to this article because I wanted to understand it a bit deeper, because actually I think it holds some value, okay? So Wall Street giants will only serve to vacuum up Bitcoin and store it in a metaphorical vault if they're too successful. The number of Bitcoin transactions would dry up, says the BitMEX co-founder. So, very important. This guy, Arthur Hayes here, co-founded BitMEX, and he has this very interesting idea of actually these ETFs are going to be bad for Bitcoin in the long term. They might be good in the short term. Money comes in, Bitcoin, exits circulation, price goes up. Cool. But for the long term, again, if we're talking about billions, maybe even trillions of dollars with these ETF managers and issuers buying up the Bitcoin supply, again, it's very finite. It might actually cause, very little transactions to happen on the network because they aren't buying fractions of a Bitcoin. These guys are buying whole Bitcoins, and they buy the whole Bitcoins from the open market, effectively, okay? So there's no over-the-counter trade here. It all happens from the market. So short-term success, long-term, well, let's have a look here. If Bitcoin ETF issuers end up holding all of the Bitcoin and investors end up buying Bitcoin derivatives rather than holding themselves, the number of transactions on the network will dry up and miners will lose any incentive to keep validating transactions. The end result is miners turning off their machines as they can no longer pay for the energy required to run them. So this whole report's pretty interesting. He said he imagined that should such a scenario unfold, a new cryptocurrency monetary network would actually take Bitcoin's place and even expand further upon Satoshi's original vision of peer-to-peer electronic money. So it does make sense in theory, right? When you think about it, if Bitcoin has all of its supply eaten up and no one's really actually trading Bitcoin, buying the individual sats and using the network, if they're instead just buying the derivative through these ETFs and these fund managers are just buying whole Bitcoins in the hundreds of thousands at a time, then yes, this would have over time a negative effect and the miners would be less incentivized to secure the network. Now, other miners would take their place 100%, but I don't believe that the network will be as secure. I don't believe the hash rate will go as high as what it currently is. Therefore, it won't require as many big, powerful mining machines to really secure it, which is, of course, the benefit of having these ASICs in this case. Now, he mentions that a replacement could actually be found here, and I think that, of course, Litecoin might actually be a valid substitute, so-called the silver to Bitcoin's gold. Now, I've never really fed into that narrative, but of course, it could definitely play out. Another really interesting one that does come to mind is BSV, or Bitcoin Satoshi Vision. He strategically said over here, I do believe, Satoshi Nakamoto's original vision of peer-to-peer electronic money. Now that, I could be reading maybe too far between the lines here, is exactly what Bitcoin SV is. So for all you guys holding Bitcoin SV, this could be very good news. Effectively, Bitcoin SV, for those who don't know, is literally how Satoshi wrote his white paper, electronic cash, it's peer-to-peer, right? That is effectively what Bitcoin SV is. However, the thing is, these guys have been under a lot of scrutiny over the course of their existence in crypto. So I just don't know how many people would get on board with it. Either way, I think that we don't know how this might unfold, but this is more of a long-term play, I feel. So next up in the news, we have an article from the block saying institutional investors poised for increased crypto activity in 2024. So this could be quite big, right? Of course, this is perpetuated, and what this article goes on about is these ETFs are, of course, bringing in more eyes from the institutional investors here, whether we're talking about large businesses, huge enterprises, multinational corporations, or just simply angel investors who are very traditional. They're looking to come into crypto via these ETFs, right? Let me just read some information on this. Data suggests that more experienced participants from traditional markets are positioning themselves for more involvement in the market in 2024. Since late October, which was when the market picked up, there's been a noticeable uptick in institutional activity, largely driven by the anticipation, of course, surrounding the ETFs. Now, the Bitcoin ETF would provide a regulated and more accessible investment vehicle for both retail and institutional investors. Again, this was actually a report we touched briefly on in yesterday's news video, so this is why it's very important you keep up to date, because we do touch on things again before even these articles have time to really get a grasp on creating their article themselves. A rate cut situation could make risk assets like Bitcoin more attractive to institutional investors seeking higher returns in a lower interest rate environment. So of course, the benefit of all this being that, hey, if again, interest rates go down, people are like, well, okay, I could get 2%, for example, in a savings account, or I could go to Bitcoin and, well, historically speaking, get like 400% in the next couple of years or next 12 months even. So that's a very viable alternative now, especially if they have these ETFs. It's just funny, right? Because I always see these things, hey, if the Fed cuts rates, it's going to be more beneficial for people to come into Bitcoin because Bitcoin's historically a more valuable asset, right? It's going to go up more in price. And then on the other side of things, we always see people saying, hey, if there's an interest rate hike, Bitcoin is more valuable because if interest rates go up, they can use Bitcoin for a store of value. So I think there's a case in any way for Bitcoin, whether it's good or bad, okay? So either way, I just wanted to share that because it definitely does make sense, right? Now, these ETFs will allow that to sort of be really forced onto the market when you think about it, because again, the average Joe and the institutional investor will then actually be able to buy that in a way that is regulated by the government. Definitely pretty interesting stuff here, and it would make sense that, again, in our prediction yesterday, $3.5 trillion market cap in 2024, that actually might come true. So the next bit of news, we're going to talk about AI. So analysts explore how AI in crypto might flourish during 2024. This is an interesting thing I actually never thought of, and you're going to want to pay attention. Both AI and crypto are maturing very quickly, and while the potential for artificial intelligence and blockchain integration remains largely uncertain, we're very new for both these industries, the emerging use case and possibilities enabled by both technologies is massive. Now, Leo emphasized the development of AI agents, a field that combines elements of AI and Web3. When they mentioned AI agents, I immediately thought of Fetch. You don't know what Fetch is? They have their AI agents that they've pretty much created that has their own little marketplace, their own little hub, where you can obviously effectively like hire out one of these agents that does a whole bunch of, your business tasks for you. and then that feeds off the collective data from other AI agents within the network of Fetch AI. They have a whole bunch of things within this network as well. I'm actually very bullish on Fetch, and I made my updated portfolio video about a couple weeks ago, but I didn't actually mention in that video that I am looking to get into Fetch or another AI network, and Fetch is the one that I am trying to eye off. And if we have a crash, I want to get into this. It's actually up quite a lot right now. On the yearly, it's about a 6.5x up. So maybe too far gone, but we'll see how far we might fall. But this is really where I wanted to kind of emphasize your attention. This makes a lot of sense. The weaknesses of centralized AI can be mitigated or offset by decentralized crypto, resulting in AI that can evolve safely, providing powerful and beneficial features that serve humanity holistically without being dominated by special interests. Makes total sense. If AI is very centralized, right, of course you have to have someone that collects the data, what data is it fed, so on and so forth. But if you can host that on a decentralized network, or even if it somehow can collect the information in a decentralized way, like through Hedera's mirror nodes, for example, in some way, shape, or form, that is extremely powerful, I believe. And so I am very bullish on the AI narrative. And as we can see here, the AI narrative is the best performing narrative so far this year. The AI narrative is in the green line. As you can see, this actually represents Render, Fetch, Potenza, and Singularity Net. The blue line represents another very powerful narrative, but as you can see, in comparison to the AI narrative, it just pales in comparison, right? That's Solana, AVAX, ICP, and EGLD, basically layer 1 networks. I mean, look at the green line difference. And then this little candlestick chart down here represents the global market cap. So outpacing global market cap by a long fold, up 360%, or about a 4.5x right now. Just insane. It went way up to a 6.5x at its peak. So AI narrative definitely going to be a very big one, which is why you're going to want to pay attention. Now, in our private community we have starting up here very soon, we're going to be tracking a whole bunch of narratives and a whole bunch of altcoins in the narrative, so we can find what narrative is popping off at what time. We're going to want to wait for that to be launched. Again, layer 1's also been a pretty big narrative as well. I think bare minimum they're going to grow quite a lot, probably be one of the safest yet most profitable narratives overall. Of course, because they are the infrastructure for the whole entire ecosystem at large. Now, we also have some legislation as well that has happened recently in crypto, or at least an outlook on what may happen in 2024, mainly regarding the US, okay? So there's been 2 Republican-led bills over the past year that kind of have been pushed, one in stablecoins, regulated at the federal level, and one for a general comprehensive approach to cryptocurrencies market, okay? We'll look at these in a little bit more detail here in a second, and I have some really interesting news with the stablecoins, or at least predictions from 2 very reputable people in the space. They have mentioned, though, banking has been tough nut to crack. It's a committee that advances very little legislation and has been very quiet in the area of financial assets that are digitally based. So this, of course, touches on banking, but as a whole, generally with crypto, we kind of do fall in the area of course, a financial sort of asset, even though I believe cryptocurrencies are fundamentally commodities, not securities, but it does fall in that sort of sector as well. So it is going to be tough to sort of push these things along the line. It doesn't happen quickly. This is a very slow sort of moving machine, but there's these 2 sort of bills that could be passed. Now, interestingly, the stablecoin bill is likely, apparently, going to be passed first, okay? We have very interesting predictions here from Cody, the Vice President of Policy at the Chamber of Digital Commerce, and also from Ron Hammond over here, the Director of Government Relations at the Blockchain Association. Cody predicts that there will be a 60% chance that we have a stablecoin passed in 2024, a stablecoin bill rather passed in 2024, and Ron predicts we have a 75% chance of that happening. So quite a good chance, and this kind of reminds me of MiCA, right? Markets in Crypto Asset Regulation. This is basically crypto regulations over in the EU, okay? EU is a lot looser when it comes to crypto regulations, particularly some countries like France. But in this case, this is mainly revolving, at least right now, with stablecoins. That's typically the step in the door, okay? That's the first start of what may come later on. So it looks like the US may, according to these 2 people, be pushed some sort of regulation for stablecoins in 2024. We also have the granddaddy. I believe this is the big sort of mover here for crypto. This will make a very big impact in how the space moves forward. A general market structure bill. Hammond said passage of the bill in some shape or form in 2024 had about a 25% chance, and over here Ron declined to put a percentage, which obviously isn't a very good look. I don't think we should even consider this, but stablecoin bill will be very interesting indeed. That'll be quite good for the space. And lastly, Japan seeks to exempt companies from tax on unrealized crypto gains. Interestingly enough, I didn't know this, but Japan actually had this rule in place where if you were a company that held Bitcoin, even if you didn't sell your Bitcoin at the end of the fiscal year, right, at the end of the financial year, you were taxed on any unrealized profits or losses that you had made, which is just ridiculous, right? But they're basically, in a nutshell, fixing it now so companies would have to sell their assets to actually be taxed, which is like most places around the world. So this might make more institutional clients over there, want to buy more cryptocurrencies in some way, shape, or form. Japan is one of those Asian countries that I believe is going to be a big cryptocurrency hub in the future as well. So, ladies and gentlemen, that being said, that will conclude today's news update. I really hope you have enjoyed, again, using information to your advantage. AI, layer ones, and generally speaking, the general direction we are going in right now with crypto is a good one. It's shaping up to be a very, very good bull run indeed. If you made it this far, do not forget to like the video. It really helps me out, and subscribe for more daily crypto news. With that being said, talk to you all soon. Take care.